Welcome back, everybody, to the Malaysia Money Matters show. It's January 3rd, 2025, and man, oh man, do we have a lot to unpack today.
Yeah, no kidding. It's going to be a busy one.
Definitely busy. Buckle up, everyone, because we've got company shakeups, potential market movers, all kinds of stuff that could impact your investments.
So should we just dive right in?
Let's do it. First up, let's talk about Malaysia Aviation Group, MAG.
Ah, yeah, big player.
They're losing two of their top executives. The CEO of airlines, Ahmad Lukman Marazmi, and the Group Chief Branding and Customer Experience Officer, Lau Yin Mei. Both announced they're leaving.
Wow, out of the blue, huh?
Seems like it. And, MAG's been having some issues lately.
Right, they've been dealing with technical difficulties, flight disruptions, all because of those supply chain problems.
It's tough to get new planes right now.
Yeah.
Everyone's feeling it.
Yeah, exactly. And even though MAG's got billions in cash, they're still stuck waiting for those new planes to roll off the production line.
So what does this all mean for MAG?
Right.
More importantly for us regular folks who fly Malaysia Airlines?
Well, it's probably going to be a bit bumpy for the company while they search for new leadership. And for travelers, it's worth keeping an eye on flight schedules and ticket prices. If these supply chain issues stick around, we could see more disruptions and maybe even pricier flights.
Ugh, not exactly what you want to hear when you're planning a vacation.
I know, right? Something to keep in mind for sure.
Okay, let's move on to another big name. Petronas Chemicals Group, CGS International, just downgraded their stock from add to hold. And there's some chatter about potential financial trouble at their subsidiary Pengerang Petrochemical Company.
Yeah, there are some concerns about potential asset write-downs. Basically, their assets might be worth a lot less than they thought. And there's uncertainty about the feedstock coming from another subsidiary Pengerang refining company.
So basically, analysts are saying there could be big losses at Pengerang Petrochemical, which could obviously impact Petronas Chemicals' bottom line.
Exactly. And that's why the downgrade is a bit of a red flag for investors. That recent recovery in their share price might have peaked, and there are definitely some risks to consider.
Okay, so proceed with caution.
Yep, always a good idea.
Now, for some slightly more positive news, LOTTE Chemical Titan, holding BHD, got an upgrade from CGS. They went from reduce to hold.
Interesting. What happened there?
It's kind of a strategic move more than anything. They had to shut down one of their naphtha crackers in Pasir Gudang because it was just losing money.
Makes sense.
Yeah, so even though it'll reduce their production capacity, analysts think it was necessary to stop those losses from piling up.
A necessary evil sometimes.
Exactly. Now let's jump over to the insurance world. Etiqa Life Insurance just appointed a new CEO, Leong Soo Yearn.
I wonder what her plans are for the company. She's got a solid background in sales and product development, so it seems like Etiqa might be focusing on growth.
That's usually a good sign.
Yep. Hopefully they'll prioritize customer interests, too.
Fingers crossed. Okay, let's switch gears again. Tinamaster Corp, a Malaysian tech company, is facing a lawsuit from a UK-based company, Ocado Innovation. They're being accused of patent infringement related to warehouse automation and robotics.
Oh, wow. That's a big one.
Yeah, and Tinamaster is fighting back. They're saying these allegations are baseless, and they're ready to go to court.
Well, legal battles can get messy and expensive.
For sure.
Yeah.
It'll be interesting to see how this all plays out, and if it ends up hurting Tinamaster's finances or their reputation.
Definitely something to keep an eye on.
Okay, let's zoom out and look at the bigger picture. The Malaysian market in general, analysts have some stock recommendations for 2025. And it sounds like Amy Investment Bank is pretty optimistic about the Malaysian equity market.
Yeah, they're saying that mandatory EPF contributions from non-citizen employees could be a game changer.
Really? How so?
Well, they're predicting it could add up to RM 1.7 billion every year to the Malaysian stock market. And that kind of cash injection could really boost growth. So they've got a bunch of buy recommendations for different sectors.
Like what?
Well, they like some of the big players like Hong, Leong Bank, YTL, Power, Gamuda. But they're also highlighting some promising mid to small cap companies in the oil and gas, construction, and consumer healthcare sectors.
So is this the year to go all in on the Malaysian market?
It's definitely a good time to explore those opportunities. But remember, research is key before you make any investment decisions. Don't just jump in blindly.
Solid advice. Research is king.
Absolutely.
Okay, let's talk about the ringgit. KSI Strategic Institute for Asia Pacific is predicting that it'll keep getting stronger against the US dollar in 2025.
That's good news, right?
Yeah, usually a strong ringgit means cheaper imported goods, more consumer spending, and it can even attract foreign investment.
Right. All good things. They're pointing to factors like moderate global growth, stable oil prices, and strong export demand as reasons for their optimism.
So fingers crossed that trend continues.
Yeah, it's definitely something to be hopeful about. Of course, things can change quickly in the global market, but
Yeah.
for now, the outlook is positive.
Okay, let's switch gears again. Not all the news is rosy. S&P Global is reporting a slowdown in the Malaysian manufacturing sector.
Yeah, they're seeing a dip in the Purchasing Managers Index, or PMI, which basically means the manufacturing sector is contracting.
Why is that?
It seems like demand is down, both domestically and internationally. That's the main culprit.
So is this a big problem?
Well, it's something to monitor, for sure. If manufacturing slows down for too long, it could have a domino effect on the whole economy. But there is a silver lining. Input costs are going down, which could help manufacturers boost their profit margins.
So some good with the bad.
Yep, always.
Okay, let's talk about something that affects everyone. The cost of living. Maybank Investment Bank just released their forecast for CPO prices for the first quarter of 2025. And it looks like we might get a break at the grocery store.
That's good to hear. What are they predicting?
They're saying average CPO prices will be between RM 4,500 and RM 5,000 per ton, which is good news, especially with Chinese New Year and Ramadan coming up and boosting demand for palm oil.
Yeah, that's definitely a welcome relief, especially with prices going up everywhere else.
But there's always a catch, right?
Well, they are a little worried about potential supply disruptions because of all the rain we've been having. That mild La Nina we're experiencing weather can really mess with agricultural production.
So true. Let's wrap up this section with some news from EcoBuilt Holdings. They might get their trading suspended because they missed the deadline to submit their annual report.
Oh, wow. That's never good.
Nope, not at all. They've got until January 8th to turn it in, or their securities will be suspended. It's a big deal because it can really damage their credibility with investors.
Yeah, investors don't like surprises like that.
Exactly. Okay, so we've covered a lot of ground here focusing on Malaysian companies and what's going on with them. But now let's shift our focus a bit and look at some international happenings that could impact the Malaysian economy. What do you think?
Sounds good. Let's broaden our horizons. All right, so first up, we've got some news from the tech world. Morgan Stanley, a pretty big investment bank, has decided to leave the Net Zero Banking Alliance.
The Net Zero Banking Alliance. What's that?
It's a group of banks that basically pledge to make their lending and investments more climate friendly, aligned with net zero emissions by 2050.
Ah, okay.
Yeah.
So Morgan Stanley's backing out of that. Seems like a step in the wrong direction.
Yeah, some people are definitely not happy about it. It seems like they're feeling the heat from some U.S. Republican politicians who are saying that limiting funding to fossil fuel companies could be breaking antitrust rules.
So they're basically saying that going green could be anti-competitive.
Yeah, it's a tricky situation. Some folks are accusing Morgan Stanley of caving to political pressure and ditching their climate commitments.
So is this a sign that the financial world is getting cold feet about climate change?
It's hard to say for sure. Morgan Stanley is saying that they're still committed to net zero and that they'll keep supporting their clients who are trying to be more sustainable. But yeah, them leaving the alliance definitely raises some questions, about how tough it is to balance politics and profits when it comes to climate action.
For sure. Okay, let's hop over to Germany. Their power market is doing something kind of weird. Prices have actually gone negative, like below zero.
I know, right? Sounds crazy. But it's actually becoming more common in Europe as they use more renewable energy sources, like wind and solar.
So when there's too much renewable energy being generated, the price drops that low.
Exactly. It's a good sign that the switch to cleaner energy is happening. But it also means they got to figure out how to manage the grid and make sure there's always enough power when people need it.
It's a good problem to have, I guess.
Yeah, in a way. It shows how much potential renewable energy has, but it also shows that they need smarter technology and better ways to store energy to handle these ups and downs.
Makes sense. Okay, let's move on to China. HUTCHMED, a biopharmaceutical company run by tycoon Li Ka-shing, is selling off some of its health subsidiary for a cool US $608 million.
Wow, that's a lot of cash.
Right. It seems like Li Ka-shing and his company, CK Hutchison, are trying to raise some money and really focus on HUTCHMED's main business, which is developing new drugs.
Interesting. It'll be interesting to see what they do with all that money and how it affects their research and development.
For sure. Meanwhile, retail investors in China are going crazy for Blox Group. It's a Chinese toy maker that's about to list on the Hong Kong Stock Exchange. And get this, investors have applied to borrow over US $60 billion through margin financing just to buy into the IPO.
Whoa, that's a whole lot of toys.
Right. It shows you just how excited people are about this IPO.
Hmm.
They clearly think Block's Group is going to be a big success.
Yeah, and all that demand for margin financing could mean that investors are feeling pretty optimistic about the Hong Kong IPO market in general.
Interesting. Okay, let's talk luxury. Rolex is raising prices on some of its fancy watches.
Yeah, no surprise there. Especially with gold prices going up so much last year, Rolex usually changes its prices based on how much precious metals cost and what's happening with exchange rates.
So basically, if you want a Rolex, be prepared to shell out even more cash. Okay, let's wrap up our international news with a quick update on the electric vehicle industry. BYD, a Chinese car maker, is giving Tesla a run for its money. They had record sales in 2024 and are closing in on Tesla as the world's top EV maker.
Yeah, BYD is definitely a force to be reckoned with. They've been doing really well in China, especially with the government pushing people to buy EVs.
It's going to be tough for Tesla to keep up.
For sure. But this competition is actually great for consumers. It means both companies are working hard to make even better electric vehicles.
Absolutely. A rising tide lifts all boats.
Hmm.
Okay, so we've looked at what's happening internationally. Now let's bring it back home to Malaysia and dive into some political and economic news. What do you say?
Let's do it. I'm ready. All right, so let's head over to Penang. They've got two big infrastructure projects happening right now, the light rail transit project and the expansion of Penang International Airport, and they've decided to do both at the same time.
Whoa, that sounds like a recipe for gridlock. Why would they do that?
Well, it actually makes sense. They're trying to minimize the inconvenience for everyone. By doing both projects at the same time, they can streamline everything, avoid those overlapping disruptions, and hopefully finish faster.
Okay, so it's like ripping off a Band-Aid. Just get it over with.
Exactly. Short-term pain for long-term gain.
Right.
Speaking of minimizing impact, the Road Transport Department, JPJ, they're offering a special deal on outstanding summonses. It's a flat rate compound fee. So if you got any unpaid tickets, now's the time to clear them.
Nice. Always good to start the year with a clean slate.
Right. It's a good deal for everyone. People can pay their fines at a lower rate. JPJ gets to clear their backlog, and it might even encourage people to drive more carefully.
Makes sense. Okay, remember that crackdown on unsafe vehicles we talked about earlier? The one where the Transport Ministry is working with the MACC? Any updates on that?
Yeah, the investigation is moving along. They've already questioned some folks from PISPACOM, and it sounds like they might expand the investigation to other organizations involved in vehicle inspections, so they're really trying to get to the bottom of it.
Good. Someone's got to make sure those unsafe vehicles stay off the roads.
Absolutely. Safety first. Okay, let's jump back to the financial side of things. Remember those mandatory EPF contributions from non-citizen employees? AMI Investment Bank is saying they're going to give the Malaysian equity market a nice little boost.
Yeah, we talked about that earlier. How much of a boost are we talking?
Well, they're predicting it could add up to RM 1.7 billion per year. That's a lot of money flowing into the market, which could help it grow even more. And with the ringgit expected to strengthen, it's definitely looking like a good time to invest in Malaysia.
Interesting food for thought. Okay, let's touch on the cost of living again. The government's decision to stop subsidizing chicken prices has some folks worried, prices going up and all that.
Yeah, it's a tough one. Subsidies can help in the short term, but they can also cause problems down the line, like draining government funds and messing with the natural market forces. But when you remove price controls, you can get price swings. But it can also lead to more competition and efficiency, which can be good for consumers in the long run.
It's all about finding that balance, right, between protecting consumers and letting the market do its thing.
Exactly. Tough job.
Okay, let's switch gears to some legal news. Datuk Seri Mukriz Mahathir just got permission to challenge a RM5 million tax assessment from the IRB, the Inland Revenue Board.
Yeah, this case is interesting. It raises some questions about how fair and transparent the tax system is. Mukriz is saying that the IRB's assessment is totally wrong and unreasonable, and he wants a judge to look it over and hopefully overturn it, so we'll see what happens. This could have a big impact on how taxes are handled in Malaysia.
Okay. Moving on to some company news. Velocity Capital Partner, used to be known as CSH Alliance, as a new majority shareholder. Datuk Pham Chi Wei just bought a huge chunk of the company. So he's the top dog now.
A new sheriff in town. This could mean big changes for the company. Investors will definitely be watching to see what Datuk Pham does and how it affects the company's future. It's always interesting when you get a shakeup at the top.
Speaking of shakeups, Awantec, they're a cloud-based service provider. Just got their cloud framework agreement with the government extended. They're basically managing and delivering Google Cloud services for the government.
That's a big win for them. It shows that cloud computing is becoming more and more important for the government. As they try to go digital, Awantec seems to be a trusted partner in that space.
Okay, last but not least, KPMG Malaysia is switching up their leadership. Fung Mungkong is the new managing partner, and Datuk Johan Idris is moving to the non-executive chairman position.
Another changing of the guard. It'll be interesting to see what Fung Mungkong does differently. New leadership can bring fresh ideas and a new focus, so we'll see what happens.
Okay, let's take a quick trip back to the international scene. Alibaba is selling off another one of its brick-and-mortar businesses. This time it's their stake in Sunart Retail Group, their chain of hypermarkets. And they're selling it to a private equity firm called DCP Capital.
Yeah, Alibaba is really doubling down on their online business. They've been selling off their physical stores for a while now. They know that the future is online.
Makes sense. It's
Yeah.
like the whole retail world is shifting.
Exactly.
For sure. All right, we've covered a ton of ground today, lots of news to digest.
Yeah.
But before we wrap up, what were your biggest takeaways from today's show? Anything that really stood out to you?
Well, the news about the ringgit potentially getting stronger is definitely exciting. A strong ringgit is good for everyone. It can help boost the economy, make things more affordable, and make Malaysia more attractive to foreign investors. So that's definitely a positive sign.
Yeah, I agree. That was a good one. I'm also really intrigued by the whole dual 5G network thing. With U-Mobile stepping in, more competition should lead to better service and lower prices. So I'm curious to see how that plays out.
Yeah, me too. Competition is usually a good thing. Well, folks, that's all the time we have for today's deep dive into Malaysian Money Matters. We've covered a lot of ground. But remember, the world of finance never stops moving. There's always something happening. So to stay on top of things and make smart financial decisions, make sure you subscribe to the Malaysia Money Matters podcast. We'll keep you updated on all the latest developments and help you navigate the world of money.
Until next time, stay informed and happy investing. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.